Okay, welcome everybody. Tonight we got the great pleasure of having Hubert back with us. And the reason we like Hubert here is because he's probably got as much common sense put into investment strategies as anybody out there. So I'm not going to take up very much of his time. Hubert, welcome to the Candlestick Forum. We're anxious to see what you got for us tonight.
Thank you, Stephen. Thank you very much. All right. So first I got to get the warning disclaimer out of the way here. I'm a registered Series 3 and Series 30, which is really just a complicated way of saying I took a couple of tests and got 70% on them, which is pretty funny. I think I had to take one of them 2 or 3 times because I'm so bad at math. And a lot of people ask me, like, why are you registered? I'm registered for a couple different reasons. Number one, I've been trading for about 25 years. I've been teaching other folks how to trade for about the past 12 or so. And the reason I'm registered is because I own my own futures hobby, which is, and plus I have seats on the exchange. So all of those things lower my cost in the market. So you can lease a seat on the exchange, you could buy a seat on the exchange, you can own a brokerage firm, and all those things lower everything that I do in the markets down to the lowest common denominator. So I don't have to pay retail commissions, which really helps. So like on losing days, which we all have those, at least I'm not losing plus paying retail commissions, which really, really does help at the end of the year, especially if you're going through a dry spell or a sideways spell or stuff like that where you're generating commissions and you're making your broker rich. Well, in this case scenario, I'm paying myself, so it's not a bad deal. So that's why I'm registered. So and since I'm registered, I have to play by a different set of rules than most people that educate other folks. You will hear me say potential. You'll never hear me say guarantee, except if it's a guarantee on a course or something that you buy from me. There are no guarantees in trading. Stops are not guaranteed, even though people will tell you they are. They're not. Sometimes stops get blown through, and you should never trade with more money than you can afford to part with, okay? And nobody has 100% losers. If you ever hear somebody say they have 100% losers, put your hand on your wallet and run from the room, whether it's a webinar or an in-person seminar or something like that. So a CFTC rule says we're going to be talking about some hypothetical and simulated performance, and they have certain limitations. I'm going to show you some simulated stuff. I'm also going to show you some stuff that I actually do in my real accounts. And at the end of the webinar, I'll give you a chance to buy one of my courses, right? That's just how these things work. Like, I'm going to show you some cool stuff, and then if you want to buy a course, cool, I'll let you do that. And then at the end, I'll take Q&A, as long as you guys want to stay here with Q&A, and we'll look at a lot of live charts. And I trade a lot of bonds, specifically since they've been moving a lot lately, and we'll do some bond trading here in the evening and maybe even some gold trading if you were cool with that. So if you can hear me, just give me a visual yes, and if you can see this big black chart with a red warning on it, just give me a yes for a chart and yes for audio. I know everybody can hear. All right, perfect. So that means I'm working everything correctly. So let's get this party started. So my name is Hubert Centers, and Stephen already introduced me, said I would have a common sense approach. I think that's just a way of saying I am not the sharpest axe in the shed or the sharpest knife in the drawer, which is probably true. I'm actually dyslexic, so I'm pretty visual, and I break things down. So if it's a complicated subject, I try to break it down to its simplest elements so that I can explain it to myself, and then so I can actually just practice it a lot, and then go out and do it, and then I'll train other people how to do it. So this is my no BS approach to trading and investing. I'm pretty much known in the industry for the no BS guy. Like, I kind of tell it how it is, which gets me in hot water sometime with CNBC and the CME and the Chicago Board of Trade and some exchanges and brokers, just because I'm like, that's just wrong. You're just ripping them off, or it's just wrong, and they don't really want to hear that sometimes. So what I actually believe is no matter where you come from or where you kind of started out in life, I was not born with a silver spoon in my mouth. I was actually born in the rural town of Paintsville, Kentucky, Johnson County, in the coal mines, and a very poor part of the country. Right now in eastern Kentucky, you either work in a coal mine, you're a teacher, which there's not that many of them, or you run a meth lab. That's the 3 main ways to generate income in eastern Kentucky. So that's where I came from. I didn't have a whole lot of role models, so I actually had to go out in the world and find my own role models. And I believe there's really 3 really, really great ways to make money and wealth in the United States. Number 1 is trading and investing, real estate, and or businesses. And I do all 3. Tonight we're going to be talking about trading and investing, which I spend a lot of time doing. I also have multiple businesses. I have about 8 different businesses that I run and operate, and I'm either an investor and I do some Silicon Valley investing. I'm actually invested in some really cool stuff that's probably going to go IPO, so that's going to be cool. If you've never had a chance to invest in some of the Facebooks and the YouTubes and the Twitters and the Ubers and the Slacks of the world and stuff like that, that's really cool to do. I will tell you that you just have to write a big check, and it's like a big lottery ticket. Like hopefully you hope the guy that's investing in all this stuff picks 1 or 2 winners. It is really exciting, though, to see what's going on in Silicon Valley. So I went out and would build businesses and give more than I receive, and in the process I've made a lot of money in the process and become a multimillionaire because I've just worked my ass off. That is plain. That's just the honest to God truth. All I did is I just worked really, really hard, anywhere from 12 to 18 hours a day, trading, investing in business, and investing in real estate. So in the process, you end up rubbing shoulders with famous and very smart people. And here's Paula Abdul, and it's Richard Branson, and this guy here with the big catfish head. This is me, and I'm not standing in front of my desk right now. I'm sitting, but I do have a really cool setup at the house. We call it the Bat Cave because when I was a kid growing up poor, I watched a bunch of Ghost of Mr. Chicken and Scooby-Doo. Anybody else watch those shows when you're growing up? And I was like, man, if I ever make it, I'm going to build a big old house with some secret doors and secret passageways. And that's kind of how I built my house. I actually have a small little office built in my house. It's like a 1,500 square foot office. And I have a bookcase that opens up, and that's the door to my office downstairs. And then I'm actually building another recording studio that has another bookcase, and it's inside another room. So I just like the stuff, and I think it's cool. I know a lot of people like that. It's so immature. I don't care. I like it. I think it's cool, so I do it. So in the process, I'm in a bunch of different masterminds with like Paul Abdul, Richard Branson. I help his charitable foundation and some of his business stuff. Dave Ramsey, our organizations work together and stuff. I actually show those guys how to do webinars, and they show me how to do some cool radio stuff, so which is neat. Mr. Wonderful here is actually evil. The man, all Mr. Wonderful ever wants to do is talk about wine. It's kind of boring unless you're into wine. You'll have dinner with him, and all he wants to do is just talk about wine. I'm like, God, can we talk about something else? So, all right. So I believe that you can do anything that you set your mind to. You are going to have to work your ass off in order to do so. You're going to have to take some risk. You're going to have to take some lumps, some bruises, and you're going to have to take some massive action to do so. So let's talk about tonight's theme for this webinar, which is called The Death of Fundamental Analysis. Now, how many of you in this webinar are firm believers in fundamental analysis? Now, I know there's probably not going to be a lot because you're the candlestick form guys, right? And you guys are really more in the technical analysis than you are fundamental analysis. Or do you also trade fundamentally sound companies and do a combination, go, hey, this is a fundamentally sound company, plus it's got a candlestick kicker signal. We should look at that, right? So, yeah, so there's nothing wrong with that. But I think most of us in here buy more into the technical side than we do the fundamental side, right? Because the fundamentals get way out of whack. All right, do whatever works. I like doing a combination, but I slant myself more on the technical side. So if you're going to be a fundamental person, these are methods that are used to analyze usually stocks only. The fundamentals fundamental analysis involves analyzing the characteristics of the company in order to estimate its value, like earnings per share, PE, and dividends, and cash flow. So when you're looking at fundamentals, there's more stuff to look at. You got to know the business model, the competitive advantage. You have to take a look at management and the trends. You have to know all that stuff. And then you got to know more stuff like ways to track management. And that's hard enough in and of itself. You got to be on all those conference calls, the quarterly conference calls. You have to be with the management discussions and the analysts and the annual reporting. And you have to go through all what the ownership and the insiders are doing. Are they buying stock? Are they selling stock? Why are they doing it? Do they just want another house in the Hamptons, or do they want a yacht? Is their kid going to college, or are they just selling because they know something else? You have to track their past performance. And I'm going to asterisk this one right here because I think this is pretty funny. Corporate governance. It's like having the fox watch the hen house. That is crazy. Corporate government. No, we're a self-regulating industry. So that's pretty funny. And then you have to go through all the financial information and transparency. So just out of curiosity, How many of you in here actually believe that CEOs and CFOs tell you the truth 100% of the time? Anybody? Yeah, right. Nobody, right? There's not going to be very, I don't think there's anybody in here like, oh, yeah, this, 200% of the time. Of course they do. Yeah. So, I mean, and it's kind of like the American thing, right? Like we always put a lot of pressure on them, like this next quarter has to be better than the previous quarter, right? Or we're going to dump your stock, right? So, all right. So now you have to go by the numbers. You have to know what market share they have, what industry growth, who's their competition, what regulations on the horizon for that company, and you just have to track some just crazy stuff. And then you have to go more by the numbers. You got to look at the balance sheet, the income statement, the statement of cash flow, and it just gets to be a little much, right? So then we start looking at the technical analysis. Now, technical analysis goes on the assumption that you believe that price is king and that it doesn't care one bit about the value of the company or the commodity. All that really matters is the technicians are only interested in the price movement in the market. Okay? And then technical analysis is really just a study of supply and demand in the market in an attempt to determine what direction the trend will continue in the future. And history is going to repeat itself a lot just because us humans are kind of stubborn and we have really short memories. So in other words, technical analysis attempts to understand the emotions in the market by studying the market itself as opposed to its components. Now, if you're in here, you're a huge candlestick fan because candlesticks have been working for years and years and years, which is a really cool way of taking a very sophisticated, complicated problem and breaking it down into a common sense way. Like, all right, this is bullish, this is bearish. The sentiment have changed. All right, so if you understand the benefits and the limitations of technical analysis, it can give you a new set of tools and skills that will enable you to be a better trader or an investor. All right. Now, technical analysis works on more stuff than just stocks. It works on stocks, options, futures, forex, bonds, currency, gold. It pretty much works on anything. You can put a technical analysis on anything. So it's a lot better than fundamental analysis. So some beliefs that you need to have if you're going to be a technical analysis person. The market discounts everything. The market discounts everything. And you also have to believe that the market is relatively efficient of discounting everything. And the price moves in trends up, down, and sideways. So one thing that's hard for people that go from fundamental analysis to technical analysis is, okay, why is Google, let's say Google's trading at $1,000. Is Google worth $1,000 a share? I don't know. What if Google is trading at $5,000 a share? Is it worth it? I guess it is if somebody is willing to pay $5,000 a share for Google, and if somebody's willing to sell $5,000 a share, then I would say it's worth it. Okay? So does that make sense? Now, fundamentally, that number may be skewed based upon whether the fundamentals actually support Google at 5,000. So history tends to repeat itself. We humans have very short memories. That's why we go from boom to bust a lot, boom to bust, boom to bust. All right, so which one wins? Technical analysis wins in my mind, but there is nothing wrong with technically trading fundamentally strong companies. Okay, so let's talk about some chart types. Now I'm going to get into the various different subjects of technical analysis. So charting types, you've got line charts. Does anybody use line charts anymore? Not very many people. You got bar charts, which are useful, but they're nowhere near as useful as candlestick charts, right? And then candlestick charts, you can also use point and figure, which is an old favorite, and it's withstood the test of time too. Point and figure is really good for longer-term swing trades. So if you look at these different ways of charting it, which one do you like here better? Which one do you look at more? Line, bar, candlestick, point and figure. Most of us in here are going to be candlestick fans, right? Just because it works a lot. It's easier to use. It's easier to figure out which way that the market may go. It will probably go higher. Well, it looks like it's running out of gas here. Well, it looks like the bulls are kind of stepping in here on a doji or a kicker line and stuff like that. So most of us will do that. Now, so this is a line chart. Now, if you ever get confused looking at charts, there's nothing wrong with going back in time and go, okay, that's an uptrend, right? That line chart is going to tell you that. And the bar chart, although it's halfway useful, it gives you not as much information as the good old-fashioned candlestick chart does, right? Candlesticks are the best way to go, in my opinion. I like to use Ichimoku in combination with candlesticks because I think it gives you an added edge or benefit when you use those two together. And then here's just good old-fashioned point and figure charts, which is a really cool way to chart some stuff. Hard to kind of learn at first. It's actually harder to learn than candlesticks is. So for most folks, candlesticks is an easier way, an easier route to go because point and figure is just a little bit hard to wrap your head around. It's not bad though once you learn how to do it, and it's really good for overall trading and position trading. Now, first you got to identify the trend, and there are several different ways to do that, but there's really only about 3 ways this works. There's going to be an uptrend, there's going to be a downtrend, and then God forbid when you get in these sideways trends and you start burning through cash, those are the hardest things to trade. There are some tools that'll tell you that you are in a sideways trend. So one thing that you can do is you can use like an ADX, and an ADX will tell you if you're trending or in a non-trending environment. So that's really cool for sideways markets. I will tell you, I have never met anybody that really makes much money in a sideways market. The power shift works really good. It's just a modified version of an ADX with another indicator, so that works really good too. But always try to focus on the uptrend or the downtrend. Stay away from the sideways trends because all you're going to do is burn cash, and it's just called your burn rate. And your burn rate can't go forever. You'll eventually run out of money. So the hardest thing about doing trading is sitting on your hands a lot of time going, daggone it, this sucker's sideways. I really want to trade it, but I can't because it's sideways. So that's just something you'll learn as you go along and start trading more. So here is a candlestick chart of a daily of the Dow. All of these are older slides. Don't worry. At the end of this presentation, I'll do all live charts. It's just a nightmare to do PowerPoints up to date to the second. So what I'll do is I'll do all live charts at the end for you. So I would say we're probably in agreement. That's an uptrend in the Dow there, right? That looks pretty good. I would say this is a solid downtrend. When Apple used to be trading from $700 to $400, that's a solid downtrend, and several different trades that you could have pulled off there on the downtrend notice. This here is a little bit harder to do. It's going to be called a sideways trend. Now, back in the 90s, there used to be when a lot of people started day trading, there used to be a company called channelingstocks.com. Anybody remember that URL? They would have commercials running on CNBC all the time. Channelingstocks.com, and not a bad theory. You can do it, and if you're going to trade sideways stuff, what you do is you draw your support and your resistance lines here, and then what you would do is you go, okay, I'm going to sell here, buy here, sell here. I can't buy there, it didn't touch. Sell here, buy here, sell here. Now notice on support and resistance. Support and resistance is an area of interest. Support and resistance is not a pinpoint lasered area. That's just not how the markets work. Sometimes they do, but you're usually better off. It's an area of interest. Like there's an area of resistance. There's an area of support, and that's where you want to start thinking about placing some trades. All right. So you have to figure out, now that you've got an uptrend, downtrend, or sideways trend, you have to figure out like what type of trader are you? Are you a position trader, a swing trader, a short-term swing trader? Are you a day trader? Are you a scalper? So you have to figure out what trend you're looking at. Are you looking at the longer term, the medium term, or are you looking at the short term? So when you do that, what you have to do is you have to break it down and go, okay, on this slide, on this chart, because we all look at a lot of charts, you can say, obviously, it's in a massive major uptrend in the long term. In the medium term, it has some sell-offs to the uptrend line, and it also has some shorter term sell-offs, and you can see, hopefully it holds that, right? So that would be longer term. This would be this would be the short-term sell-off, and this would be a medium-term sell-off into support. Now, there are several different tools that you can use to set up and use for trend. I'll show the hedge fund indicator at the last if you want me to, Gary. Trend tools that I like trend lines, I like moving averages, I like channels, I like Ichimoku cloud charts. A hedge fund trend indicator works really good for trending tools. Candlesticks can work too. These are some tools that you're first going to have to identify the trend with. Now, I will tell you, when you first start trading, you put so much garbage on your chart, then you're like, well, I've got to have the stochastic, the MACD, the RSI, the Ichimoku, the Renko, the point and figure, and 92,000 moving averages. Anybody ever suffer from that? Your job is to systematically take off the ones that don't work. Okay? What you do is just like, this doesn't really, does this add in the decision or detract from the decision? This thing's confusing me. Fine, get away from it. It's crap. I'm not using it again. All right, this one helps me. All right, I'm going to keep that. And get it down to where you're using about 3 or 4 different indicators, and you don't want your chart to be too busy, okay? And then also, not everything works on every type of market, right? Like, there's certain indicators and certain setups that work better in some markets better than others. Like, believe it or not, there's some candlestick programs or patterns that work better than markets than other markets do. Like in bonds and gold, you got to trade those two creatures totally separate. In the index futures and crude oil, those two things trade totally different. So you got to know the personality of the market that you're trading. All right, so now once you get done with the trend tools, you know, you want to have a way to like identify where you're getting in. So here's a Hakanashi, which just is a version of candlesticks that just tells you if they're blue, it's an uptrend. If it's red, it's a downtrend. So a very easy common sense way to do it would just be, hey, let it go from blue, let it rotate to red, and then go back to blue again, and you can enter here on a candlestick combination. So it just makes your life a little bit easier. So here's a trend line. A lot of people will lie on charts. In other words, they'll try to fit the trend line and go, okay, well, this trend line is, well, I think right here's this trend line right here. And it's really not. Like a real accurate trend line will be at an exact 45-degree angle. That's why I like using them on point and figure charts, because on point and figure charts, all trend lines are at an exact 45-degree angle, or it does not count. And then what you'll do is you'll just kind of fit that to it, and that gets a little bit, you know, sketchy sometimes. So in this example, you can see here our moving averages. There's some pretty common ones, 20, 50, 200. A lot of folks will also use a 40 and or a 100. Just be careful. Don't put too many on there, because at one point, have you ever seen any charts that look like this with moving averages? And you're like, dear Lord, of course it's going to hit every one of them at some point in time. How do you know which one's important? So, you know, just make sure you cull the garbage out. Now, here's another example of a trend line that we shown, and you see it should have held. It did not. So when it came down here and it bounced and then it went through, then you know this is going to be overhead resistance now, right? Whether you believe it or not, that is now overhead resistance. It shouldn't get back up through it. So what we would do is on the sell-off, then when it comes back up here, we should sell this area, right? So it's really, really important to be super clear and super honest with yourself when you're doing technical analysis. Here is an example of a sideways market, and we've got support and resistance area, right? So here's a support area down in here. This is a support area. This is a support area. This one's a little better, right? A little bit better. Support area, support area. And then here you can see resistance, resistance. Here's a resistance area a little bit bigger. Here's one didn't touch it. And then this one actually went through it, right? It's not that it didn't count. It just went through it. So very easy channeling methodology there on a sideways market. I would caution you, those are hard to trade, so be careful. Lots of people will look at volume, although a lot of people will incorrectly use volume. What they'll do is they'll tell you like, well, have you ever heard this from CNBC? Well, the market is going up on low volume. Therefore, it cannot be real. I hate when CNBC says it. I don't even watch it anymore. It's so boring. What they mean is it's not a real, or this is not a real move. How is it not real move? If something moves from $5 to $1,000, but it's doing it on low volume, it's obviously real. It may mean it won't last, but if you do a volume study, like I'll pay technical analysis, little techies, I'll pay people that backtest stuff, and I'll go, I want to know if something advances on low volume, is it good or bad? And based upon the studies I've paid for, it's actually a good thing, not a bad thing. Now, sometimes you will have volume spikes where you get these nice little sell-offs, and you get a spike to a low here, and then that will facilitate a nice little bounce. But if the market goes up on low volume, it's actually a really good thing. Really good. It'll go higher. If the market sells off on low volume, it's actually a really good thing. It'll continue going down. So be careful on what you actually believe and what you see. I'll build indicators for my own personal use, and sometimes I'll share them with other people. Sometimes I'll sell them, where what I'll do is I'll say, okay, this yellow bar here would be low volume. A green bar would be bullish volume. I look for patterns when it goes from red to green like this. I call it a crazy Ivan. I know that's going to be a reversal signal for me. I even have a little mathematical formula in the purple one here. It goes, hey, heads up, this is questionable volume. There's something wrong here. Pay attention. Now, if I have a candlestick formation around that same time, I know, hey, be careful. Something's about to change here. Just something's just not right. And how I have my programmers do this is I'll have them look at the bid and the ask and what the ratio is going off, the frequency and the speed and the size of those things to calculate and let me know if it's good volume or bad volume. Now, there's obviously chart patterns that you can use. You can use the good old-fashioned support and resistance, the good old-fashioned head and shoulders, double tops and bottoms, triple tops and bottoms, triangles and gaps. So what you do, the longer you trade, you start writing down these, okay? And you write down the ones that repeat themselves in your playbook, okay? Now, if I was to tell you, like, hey, head and shoulders works wonderful, but every head and shoulders that you take doesn't work out for you, then you just scratch it out of your playbook. Go, these head and shoulders plays, me and head and shoulders do not get along. And you just go, this one does not work for me. I'm not using it. But what you have to do is you have to start coming up with your own personal playbook that you can do. One of the most frequently asked questions I get on these webinars is, what's the best time frame or the best stop to use? There is no best. There's what you can pull off. So if I'm trading bonds and I say, hey, I'm using a 15-tick stop loss, which is about $700, and you're sitting there going, oh, that's too much, I can't handle it. But if I go, okay, I'm using a five-tick stop loss, which is about $150, and you're like, oh, I can handle that. Well, the $700 stop may be better, but if you can only pull off the 5-tick stop loss, then that's the best one for you to do. So what I've done is I've made a playbook of a lot of stuff that kind of repeats for me and that I like, and these are some of the ones that are just have treated me well over the years. So good old-fashioned and support and resistance works for me. I like it, but I don't use it like a laser, like there, here. I use it like, hey, there's a support and resistance area here that I want to play with. There was a resistance area here that I want to play with. I tend to like those trade setups. I also like head and shoulders. So here's the head and shoulders. We actually got one in the Dow right now that I'll point out to you in just a minute. So here's the left shoulder. Here's the head. And then here's the right shoulder. And then from here you draw the neckline. This is the neckline. And then once it breaks the neckline and it goes through it, it's going to sell off. Then if it comes back up here and tests it, there is a sell signal on resistance, and you have a nice little combination play there, and then you can get in a nice little short. So I like those. All right, they're easy to scan for too. Double and triple bottoms tend to work out, although some people think that they have to work like this, like 1, 2, and then 3. I just have never seen those to work perfectly. I've seen them that look like this, where they'll go like this, and then they'll go a little bit lower, and then maybe it comes like this. That tends to be more of the pattern that those things go by. So remember, a triple bottom is an area of interest on a triple bottom. It does not have to be pinpoint accurate. If you're waiting on it to be perfect, you're never going to make a dime in the market. You're just not going to do a trade because there's no perfect. There's no such thing. Same thing with a double top. A double top, a lot of people will tell you, like right here, boom, boom. There's got to be a perfect top to that. And you don't have to have, you do not have to have a perfect double top. What I have found is the ones that come up here and put in a high and then blow out the high by a few ticks, it scares the people over here to death, scares out all the weak hands, and then it just collapses on itself. I like those a lot better. How do you scan for head and shoulders? There's several different platforms out there that'll do it. You could use TradeStation. You could use stock charts. You could use bar charts. You could use FinViz. All of those are just some platforms. There's a couple of free sites on the websites that'll do it. TradingView, tons of them will do it, and you just scan for technical setups like that can do it. You can even do it for like candlestick patterns and stuff that you guys use. So another thing that works for me is triangles or wedges, either if they're going up or down. And if you can break these down and combine these with breakaways, yeah, stock fetch will work for you. So here you can see you've got a wedge and it's going down, and you see the nice little gaps to the downside. Those are good plays because you've got a pattern here of a triangle, whether you're doing an ascending or a descending triangle, whether it's going up or down. And then if it gets some breakaway gaps, you can do those. Now, right now, the best money that you can play with in the stock market is bracket trades. And I'll show you those at the end of the session, too. There's tons of bracket trades right now because of earnings. So in this example, here's a Netflix bracket trade. So obviously it's usually earnings, or the CEO ran away with his secretary, or he's getting a divorce, or some, God forbid, a CEO or somebody went like down in a plane or something, right? Sometimes that stuff will happen. You'll get a huge gap up or down, and then you just bracket the trade, and you go, okay, if it goes above this, I'll go long. Below that, I'll go short. Same thing. Bracket the trade. If it goes above that, I'll go long. If it goes below that, I'll go short. Bracket this trade. Above here, I'll go long. Below there, I'll go short. It's a very easy price action trade to take advantage of. Okay. Now, remember, your job is to take your chart that looks like this and break it down piece by piece. And you can combine them with volume as well. Yes, you can. Now, right now, where are we at in the market? What cycle are we in the market right now? Are we in optimism? Are we at 1, 2, 3, 4? What stage are we at right now? Are we in optimism, excitement, thrill, euphoria, anxiety, desperation, panic? Where do you think we are right now? Because I like doing this as just a general sentiment, because all of you are traders in here. So anxiety, okay. What time frame? I would say just daily, not just a daily right now. Where do you think we're at? 5s. I got a lot of anxiety. So it looks like a lot anxiety or denial. Okay, all right. So that's interesting. 7, fear, a little fear. All right. So it depends on what market too, right? If it's, and I would just be like the index, indecision. So you can see about where we are, and I would consider us all more than your average bear in here, right? Or your average trader, because if you're in here, you're trying to focus on learning more about the markets, right? And you're trying, more than the average mom or pop that comes on and goes, the Dow is down 230 points, the S&P's up 12, right? All right, so we get a little feel for about where everybody else thinks the market is at. That's interesting. All right, live charts next. But before we look at live charts, I want to share something with you, okay? So I'm gonna go through a course real quick, and then we're going to spend the rest of the time on live charts, questions, and we're going to do some trading, because it's 8:30. We can trade gold or we can trade bonds. All right, so how to take your trading to the next level. You have to be a good chartist or a good chart reader. The good news is it's not hard. You just have to know how to do it, all right? Some good old-fashioned tricks of the trade is what I'm going to talk to you about. So I've got a course called Technical Analysis 101, and in Module 1, I cover bar charts, line charts, candlestick charts, and line break charts and point and figure charts, all right? So in Module 2, I cover chart patterns, the most important candlestick patterns. You don't need this. Stephen does an excellent job of that. You don't need that at all. Okay, he'll run circles around me in candlesticks. He's the man. The gap types: breakaway, normal, continuation, exhaustions, island reversal, and dead cat bounces. So what this is this is my playbook in technical analysis that I've put together over the past 22 years of stuff that kind of repeats and does well for me. Market turning points, hedge fund buy and sell signals, price patterns, head and shoulders, parabolic moves, double tops, triple tops, V bottoms, V tops, 32 high, 62 buy, 32 low, 62 sell. Sounds like a football play, doesn't it? Base jumping, launch pads, W's, M's, triangles, wedges. And then the coolest thing about this, I show you my rules for each one of these setups. I do like the NR7. Those are good too. And then I show you how to enter them, how to X them, and the stops and stuff that I use for those trade setups. So that's in Module 2. Module 3, I go through a point and figure module and a clear-cut signal, zero guessing, how to use only price to trade the markets, the best patterns for point and figure, how to use point and figure to draw perfect trend lines, because every single one of them are 45-degree angles, which is really cool. It'll easily define for you support and resistance, and it'll show you where to place your stops and your target levels. It's great for swing traders. All right. So that's in Module 3. In Module 4, Ichimoku cloud charts, #1 technique used in Japan. It's great if you're into candlesticks. If you're into candlesticks, Ichimoku will complement it very well. You're going to know exactly what's happening in seconds. It gives you very clear trend signals, and it's designed to produce very clear signals. So I love Ichimoku. Market profile is a great way to trade too. It's more for intraday than anything. So if you got a lot of day trades that you like to do, I cover some market profile. And it has nothing to do with levels and stuff like that. It's got to do with learning. I can cut your learning curve in half and teach you a very clear way to buy and sell areas based upon what really drives the market intraday, and that's the low value area, the high value area, and the point of control, which is really, really cool. All right, that's a module 5. Module 6, Fibonacci, how and why to use them, when to use retracements, when to use projections, how to plot it on a chart. The best two areas of fibs, in my opinion, are the 50 and the 61.8%. I don't use all those others. And I teach you a great little trade that if you just master this trade alone, it'll take your trading to the next level on how to properly buy a pullback using Fibonacci's on ambush, major and minor signals. So that's in Module 6. Module 7, if you've never traded futures, you should trade futures. If you're trading stocks and or options, what keeps you up at night? What does it? What do you sit there and toss around and go, dear God, please don't gap up, right? Please. No. Oh, no, I'm on the wrong side. Yes, please gap up, right? So you are always praying to God at night if you've got stocks or options that'll either gap in your direction and not gap in the opposite direction. So if you have a small futures account, and you can have a futures account for $3,000 to $5,000, you can hedge a lot of that stock and options risk that you take in overnight. I'll teach you what they are, why you want to use them, when you want to use them. We'll talk about the contract specs and the margins. I'll talk about the best ones to pick and the ones to trade and the ones to stay away from. So I'll throw in a Futures Trading 101. Now, also, I'm going to give you a bonus. Number 1, I'm going to give you a live analysis, four live analysis sessions, 1 a week. You bring a list of symbols, and then we'll look at them together, and then I'll be your personal technical analysis guru, I guess, and I'll say, here's what I would do with this, all right? I'll teach you the entry, the exit, and the target, and I'll say, hey, you should just get out of that. Plus live Q&A, so we'll do 4 sessions, 1 a week, okay? I'll throw that in as a bonus. So here is, I believe, and then I'll also throw you in the trading room. We've got a trading room, and we'll trade the markets live, and I can show you how I use this stuff in real time, and you can put it into action after you take the home study course, okay? So I'll give you access to do that. You have absolutely 0 money at risk. It's 100% satisfaction guaranteed, no questions asked. If you don't love it, I don't want your money. That's just how it is. I always over-deliver, period. And my goal is for you to receive at least a 10 times your ROI on your investment in this course. All right? I got 2 more slides, then we're going to do live charts. You now have a new opportunity to take your trading to the next level. Will you catch the next big move in the markets? Because I know I will. Now, I have to asterisk this. I will not catch every single move. But if there's a move like this, usually my operation is like this. I'll usually miss the first 25%. I'll get in about here, and then what I'll do is I'll get out at multiple places, either a little bit too early or a little bit too late, but I never get the dead low like here and the dead high. I have a couple times in my life, just it's not consistent. So what I usually do is I usually get in here or here, and then I usually get out here or here. But that's okay. That's the meat in the middle, and that's good enough for me. All right, so now's your time to act. Here is your course. So if you go to hubertcenters.com/big for Bigelow, you can have this course, and Becky is kind enough to post it there for me. Thank you, Becky. So chart types, that one's free. And now a lot of these modules I actually sell every day through our website at these prices. Chart patterns, $97. Point and figure, $97. Cloud charts, $97. Market profile, $97. Fibonacci, $97. And then I'm going to do 4 live analysis sessions, 1 a week. That's $97. And 1 live training session for a grand total of $779. You can buy it tonight for the first 25 folks that grab it. Don't call the office. Nobody's here. I'm the only one here at the office, so don't call this line, please. Well, they may be home. Maybe they're at the house. Maybe they're doing it from the house because we've got office lines at their individual homes. So you can try it, see if they pick up. And that is your link. Does everybody see that? It is a home study course. As soon as you hit the Buy Now button, you can watch these videos online at your own pace. And then we'll start you on the weekly sessions. And you got a 30-day money-back guarantee. If you don't like anything, just let me know. Am I teaching anything or just selling? Yeah, I'm about to teach you in just a second. All right, so all right, let's go through and do some live analysis, and let's see where the markets are. Any questions so far? I buy on HB. A buy on HG. All right, so I'm going to remove this, discard, and now I'm going to open up my trade station. So let's go through the markets really quick, and I want to go through some markets that I like and some markets that I don't like. And then we're going to do some bond and gold trading here. So on the ES, oh, here's another way. One of the guys that has our hedge fund trender, our hedge fund trader system. Let me show you how easy this can be. So this is a daily chart. I'm going to change it to @US, and this is one of the reasons I enjoy trading the bonds so much. There's Gary right there. So this is what we call a trading system that's been turned into an indicator. So let me show you how easy trading can be if you're willing to make it easy and not make it so daggum hard. Do you see these green dots below the price action? Yes or no? See the little green dots? Now, what this does is it takes all of the technical analysis in the form. So if you see these series of green dots, this means it's in a massive uptrend. Okay? Do you see these green dots right here? I'm going to get a drink of water while you're answering. Oh, it's good. Okay. Now, that means to tell you that, hey, Chief, you need to stay long if you can. All right? Now, what happens next, I'm going to bump back here to the most recent buy signal. You see this big green dot right here? That is a buy signal. The big green dot means a major uptrend, buy it here, and then your stop loss is going to be this little blue dot right there. You see that little blue dot that I'm pointing at with that green arrow? So buy here, your trailing stop loss is right here, trail, 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 and you have a potential exit here, or you can keep on trailing it, okay? So here's another example of how this will work. Major uptrend, buy on the big green dot, trail your stop, trail your stop, trail your stop, trail your stop. You can either exit it here, or the red dot is an exit signal. So see how easy that is? Now, look, have you ever seen a prettier chart than this massive uptrend than bonds are in right now? Okay, so here's the reason I like trading bonds. Because it makes me look really, really smart, right? And have you ever heard the analogy bull markets make everybody look smart? So quit trading stuff that's just chopping around and sideways and trade something that's in a massive uptrend or a massive downtrend. So this is called the hedge fund trader indicator. It's an indicator put out by Smart Setup, so it's one of the companies that I own. This is just to show you why you should be trading bonds. Let's take a look at the TY. The TY would be is the 10-year note. It's not as good as a trending. Now let's take a look at this at FGBL. Anybody ever trade this thing? This is a great instrument to trade. I trade this all the time. Right now I'm up $5,000 a contract on this trade because I bought the last little pullback. Okay, this is the Euro Bund. Look at that. It just makes you look smart, right? You just buy all the minor pullbacks, right? That's all you do. So let's go through and look at some other markets to trade. All right, so that's what you can do. You can make it easy like that. So let's take a look at the ES. What does the ES look right now to you? To me, it looks a little bit like a nightmare. It's sideways. It's in the cloud. It's below the turning line. For me, the ES does not interest me at all. I don't want to mess with it. I do not want to. Yeah, they show up the same day. Yeah, and you can do it on smaller time frames too. You can trade it intraday. It'll work on intraday time frames too. So on the ES, I'm just going to leave it alone. There's no edge for me there. Let's take a look at the YM really quickly. YM is, all right, so look at the YM. So YM actually has a head and shoulders. Look here. Here's the left shoulder. Here's the head. Here's the right shoulder. Here's the neckline. You see how it broke it yesterday and it retraced back up today? See how the turning line is overhead resistance? So the Dow is probably going to sell off and go to 16,803. It does look like a parabolic SAR. It's just not, because on the hedge fund trader, you can see on parabolic SAR, when the candlesticks hit the dots, it reverses, and you can see it did not happen here. So it's way better than the parabolic SAR, but it does look like it. All right, NASDAQ. Let's take a look at the NASDAQ. What's it look like? NASDAQ a little stronger. It is in the cloud, and the lagging line's holding her, and it's above both the turning and the standard line. It looks like it's got a little bit more strength than the Dow and the S&P do. So I would be more inclined to go long that one, although the Russell looks better than all of them. It's above the cloud. It's holding. It's above the turning line and the standard line. This thing will probably go to 1220 over the next few days. Okay, so it's probably going to come up here and tag that 1220 area. All right, let's go to what is the bond trading vehicle, TF. So this is TF. This is the Russell. The next thing we're going to talk about is the 30-year bond. So now, which way does the bond look like it's going to go? Bonds look like they're in a massive uptrend. If they come back here and pull back, I would buy them. Right now, they're up even on the day. So I want to go over here. I want to get some bonds. So let's go over here and get some bonds, all right? All right, so what I'm going to do is I'm going to look at a 5-minute chart of the bonds. You can look at any chart you want. The contract that I'm trading right now is the USH15. Now, the bond market trades in 30 seconds, 1 30-second. So today, all right, yesterday the bonds went straight up and then they got a pullback, right? So they're still in a massive uptrend. So what I want to do is from this high water mark that the bonds just put in for me, okay? You see this high right here? I'm going to mark that as the high because I still believe bonds are in a massive uptrend. Now, we're going to do something called math. Somebody's going to help me so you make me look like I can add, all right? What is 150, 14 30-seconds? What is 14 minus 8? What is 14 minus 8? Someone calculate it for me so I don't have to cheat. Is it 6? Is that what it is? 6? All right. So what we're going to do is I'm going to place a buy stop down here at 150 and 6 30-seconds, and I'm going to risk 5 ticks, which will probably be 150 and 5 30-seconds. So this is going to be my entry. Okay. This is going to be my stop. All right. And then if I enter this thing at 150 and 6 30-seconds, then my target is going to be at least 1 full point higher, which is going to be 6 30-seconds. So in other words, I'm going to risk this amount of money. Right here, I'm going to risk this amount of money in order to make this amount of money. So that's not too bad. I'm going to risk $156 to potentially make $1,000. Now, I did this exact same trade yesterday, and I only ended up making about $700. Okay, I didn't make the full 1,000, so I want to be completely transparent with you. All right, so here's what I'm going to do. From the high at 14, I'm going to first make sure that I have this set up right. See where it says 60? I don't want that. I want to stop at 5, and I want a target of 32. Okay, boom. Now I'm ready to go. Now, make sure my count's in here. Make sure my auto LMTP STP is in here. I'm going to do one quantity. That's the lowest size you can do. If you want to do more, feel free. I'm going to attach an OSO. I'm going to make sure my bracket trade is set up. My stop market is going to be 5 ticks. My target to liquidate is going to be 32 ticks. And then from this high, I'm just going to go 1, 2, 3, 4, 5, 6, 7, 8. Please fill me there. Now, if the market sells off and gives me a fill at 150 and 7 30-seconds, then it will place the stop at 150 and 1 30-second and my target at 150 and 6 30-seconds. Now, if I get filled and I go to bed, everything will be good. Now, if I don't get filled by the time I go to bed, I'll still leave this order on here, okay? Now, if this market was to go up right now to 150 and 15 30-seconds, I would have to move my entry up 1 tick. So what I'm looking for, what I'm banking on the bond market doing is going up and pulling back 8 ticks, giving me an entry and not pulling back more than 8 ticks, right? Because I've got a very tight stop loss of 5 ticks, and then continuing on its merry way. That's how boring. That's how bonds are. They're very boring, like yesterday. See how look how boring were they were today. They sold off, bounced up, sold off, bounced up, sold off, bounced up, sold off, bounced up. Today they were in a down mode. Yesterday they were in a good trending up mood. Up, sold off, up, sold off, up, sold off, up, sold off. Very easy to do. Why not go long right now if you think it's going to go up? Great question, because here's what happens. Right now, that's the highest price that bonds have been in this overnight session. Now, if I'm telling you I've been trading bonds for a very long time, and if bonds retrace back consistently 8 ticks, if you go long right here and you're using a 5-tick stop loss, what's going to happen to you? You're going to get stopped out, right? And you're going to lose some money. So bonds is the proper way to trade bonds is to hunt them. So what you're going to do is you're going to let them be in a massive uptrend or a massive downtrend. You let them go up without you. You let them pull back, and then you purchase them on an 8 a 12 or a 16 tick pullback. Best way to trade them that I have found anyway. You could buy this breakout here if you want to, and if you're going to do that, then trade this. Trade the at FGBL, which is, it won't open up again until 4 a.m. But this thing here, the Euro Bund, would do better with a breakout candidate, okay? So if you do this thing breaks out a little bit better than ours does. It doesn't pull back as methodical. What it does is it breaks out and keeps on going, breaks out, keeps on going, where ours will go up, pull back, up, pull back. So you kind of got to know the creature. You got to know who you're dancing with, okay? All right, let's see. Can use a parabolic SAR looking indicator be used on a smaller time frame? The hedge fund trader indicator, yeah, it can be. This is actually a system that used to be used by hedge funds, which was developed by a good friend of mine, Mark Helwig. And yeah, you can use it on a smaller time frame. Yeah, no problem. All right. What is 14 30 seconds, 8 30 seconds, and 16 30 seconds? What is 14? What do you mean? That's how bonds work. So they work. All right. So let me show you how bonds work. I'm gonna kill this order over here. All right. I'm gonna kill this order because I'll just replace it. This is how the bond market works. So I'm gonna kill this order. I'm just gonna go long to show you something. All right. I just went long at 150, 14 30 seconds. Do you see that? So this thing goes in a tick. It'll be 150 in 15 30 seconds. And if it goes up, I'll make $31.25. So that's the increment in which the bond market trades, okay? So in this trade, like this is an example trade. It's a real trade. It's one of my real accounts. Let's trade ES. Is it active now? No, don't trade the ES overnight like that. The ES is a little thin at night. You want to trade something that's not as herky-jerky in the evening, and that would be either the bond market or the gold market, yeah. Time. What do you mean time? HF. What do you mean time? All right. So that's what we're doing right there. I'm going to kill this order, cancel it, close it, and I'm actually going to bid where I need to. Close position. Not know why it's not sitting here. That's awesome. Cancel all. Close all. Well, TradeStation doesn't like me right now. All right. Interesting. Still long a position. Close. All right, so I'll have to call TradeStation here. Oh, prices in fractions. Yeah, prices in 1/30 seconds. It's 1/30 second, 15 30 seconds, 12 30 seconds. So yes, it moves in 1/30 second. Yeah, 30 seconds fractions. There we go. So now I'm gonna. Why is that close not working? Interesting. So I have a live trade in a webinar and no way to remove it. So we're gonna keep an eye on this sucker. Thank goodness I like the long side, right? Audio keeps cutting out. Just reset your PC. Can you look at a chart? So I'm gonna, as soon as I get off this webinar, I'll call TradeStation and kill this order because for whatever reason I don't have a stop and a target in it because I canceled all. Yes, and then I want to close that order, and it's not closing. So I'll deal with that in just a second. All right. So check your messages. I'll do that in just a second. So let's open it up for some chart stuff. Give me some symbols. HD. I'm going to move my thing. Now, the link again for the course is hubertcenters.com/big. I'll post that for you, and then we'll do some chart. I'll jump off here and call TradeStation and ask them why it's not working. All right. Home Depot looks really, really good. It's a valid uptrend. It's holding the cloud, the turning line, and the standard line. Probably going to go to 115. AKRX. All right, AKRX is a good long. It's above the cloud, above the turning line. Target will be 48. Can you analyze the ES in more detail? Yeah, ES is not, there's no advantage trading the ES right now. I'll just leave it alone. At ES, it's in the cloud below the turning and the standard line. Right now, there's no edge, no advantage, just means just leave it alone is what I would do. CPXX. All right, on CPXX, this is a decent long. It's a penny stock, so I don't recommend penny stocks, but it's a long with a stop of 259 and a target of 350. STZ is a long with a stop of 103 and a target of 125. Phone number, I believe, is area code 859-963-3445 is the telephone number. I think I am the only one here. but Jared and Michelle are probably at home answering lines because even when they go home, they also answer the phone lines there. Mm-hmm. All right, let's see here. Where am I at? BABA. Oh, Apple and Crude. All right, so Twitter, TWTR. TWTR, Twitter. Twitter is a good short. It's below the cloud. They just answered the phone. Thank you. So they are answering the phone. It's a good short below the cloud. Target's going to be 34.16. BABA is just a good short. It's been a short for a while, though. So you see how it's been below the cloud. It ran up into resistance. It closed below both turning and standard line yesterday. Huge gap down. Now just be smart and trade a bracket trade on Alibaba. If it goes above $90.69, it's a long. If it goes below $87.43, it's a short. Okay? All right, Jared said they are here. So Jared just typed in. So GLD is going to be a decent long. A decent long. Here's a long signal above the cloud. I would wait for gold to pull back to 118 before I would purchase it. Let's see here. Where am I at? Facebook, FB. I'm trying to get everybody. Facebook is a decent long above 78 with a target of 85. At crude oil is still a good, it looks like it wants to go lower, but it's running out of steam. So you don't have a buy signal yet. I would wait on this. But right now it's trading sideways to slightly lower. Wait for a perfect buy signal, okay? GTIM. If I missed your message, you guys can see they kind of go up through here. Is a good long with a stop of $7 and a target of 9. Thank you. BB. BB. For whatever reason, BB will not work for me. I have no idea why. BB. That's just strange. Okay. AGEN. Okay. AGEN. There we go. That works. Once again, penny stock, anything below $5, I'm not great on. I tend to just short these things. It looks like a decent buy at $5 with a target of 6. ExxonMobil. I kind of like ExxonMobil. It looks decent, even though it's below the cloud. You got a little triple bottom here, right? So I'd wait till it gets above $90.61. BP. BP is a decent long. There's 3 candles above the cloud. Lagging line that is not confirmed. I would give this a shot at $38.75 with a stop of about 34 to see if BP could bounce up when crude oil goes higher. GPRO. I don't think crude's going to stay at 40 forever. All right, so GoPro is a good short. Let it rise to 57.56, and then it should go back to 40. Thank you, Becky. Appreciate it. Let's see here. Where am I at? Let's go blue. BLUE for Judy. Blue, really good. See, I did a nice bracket trade here, breakaway bracket trade. It's a good little trade. Looks good here in this area with a target of about 120. BBRY. BBRY, BlackBerry, sideways at best. I would just leave it alone. CLF. CLF is a good short. It is below $6.11. It's probably going to go to $4. GWPH. And if I'm missing you, I don't mean to. It's just they go kind of fast up through here. Decent long with a stop of 72.98 and a target of 82. MBLY. Is a short with a stop of 40.15 and a target of 35. JDST is a good short, but it's going to bounce to 14.39. So I would go long here at 9.42 and let it bounce to 14.39. Then I'd be out of it. NFLX, Netflix, is a what? Bracket trade. Jump the cloud. Now, this is one that we put out to our membership, and we said, hey, it jumped the cloud. Now it's a bracket trade, so our recommendation was to get long right above here at 4.15, and that's keeping on cruising. I like it. Looks good. GM is a decent long here. Let it drift down to about 32, pick it up, use a stop of 31 and a target of 36. AMBA. AMBA, decent long here with a stop of about $54 and a target of $64. I have some questions that cannot be answered now. Can I call tomorrow? You can try. You can try, Steve. SBUX. You can try a call. Yeah. We don't work a ton on Fridays. I don't trade a lot on Fridays, but we'll be here. But yeah, you can call. Let's see here. Starbucks. What is this? Breakaway gap. Bracket trade. Looks good. North of 94. SLCA. Yes. But yeah, we're around all times. I mean, my people answer the phone all the time. And if I'm around and they don't know the answer to the question, they ask me and I tell them what the answer is. So SLCA is a short with a target of 20. JBLU. What is the current trade on GC? A long on a pullback. This is a nice little breakout. JetBlue Airlines with a stop of 15 and a target of 1875. SWKS Skunks Works Solutions. Great looking long. Stop of 77.79 and a target of $97. NXP is a good long. I'd let it pull back to 1460 before I would purchase it. Visa is a short because it's in the cloud. It's probably going to drop to about 239 to 227, so be careful on that one, okay? It's just you got to wait on that one. TLT is going to be the bonds. It's going to be the bonds long. Wait, if you can get a pullback to 134, if you've already missed it, 134 would be the next pullback. It's probably going to go to about 140, 145. BITA, good short. Probably going to go to, where's it going to go? Probably $40. Visa went up after earnings at 4 p.m., up $11. Let me see. Visa here. It's still going to be a decent short. If it's up $11, it means it only went from 248 to about right in here, so it's going to be bumping its head in overhead resistance. I'd still short it. Yep. GENE. Do you teach bond trading? How much? I do teach bond trading. I'm going to have a class in this February called Bond Trading Bootcamp where I teach people how to trade the 30-year, the 10-year, and the Euro Bund. Yes. Thank you, Becky. Appreciate it. Qualcomm's. That's a great short break. That's a bracket trade. That thing's probably going to go to 60, maybe even $55. MasterCard will probably do the same thing as Visa. So here's where I'm saying, like, you see how Visa was up here? So Visa should go all the way down to the cloud where it bounced up. So MasterCard will probably do about the same thing as Visa. So it's at the bottom of the cloud. In this situation, what you want to do, you want to buy at the top of the cloud and the bottom of the cloud because it'll try to bounce out of those areas. Once it's in the middle of it, just leave it alone. INTC. Intel is it's actually a buy down here at the bottom of the cloud. That's support, and the lagging line's hooking. I'd give Intel a shot. MSFT is a bracket trade, I believe. Yeah, bracket trade here. See how it broke through the cloud? Below the cloud, bracket trade to the low side, probably going to go to $40. All right. Your link is hubertcenters.com/big. I am going to jump off here and call TradeStation and ask them what is up with our platform because I'm down 2 ticks, which is not a lot of money, but it would be nice if I had a stop and a target put in there. Good luck. Hope it helps. I will see you on the next one. Thank you very much. Hope you got something out of it. And good luck trading the rest of the week, which is tomorrow, which is Friday. I wish you the best of luck. Stephen, thanks for having me, and I'll see you guys again